Chen, and together with Shelly, my co-founder of Beyond the Billion, we are so excited to be here with you today to share with you some of what we've learned on our journey to our first billion and what that means for gender inclusion in the tech and VC industry. 3 years ago, when we first launched the $1 Billion Fund for Women, we were already seeing great women innovators across the world, building everything from nanofiber-based medical devices that will help the human body heal itself, to platforms connecting rural communities and helping them thrive. Women were innovating in virtually every sector that had transformative power in ag tech, clean tech, fintech, you name it. And yet we're only getting 2.2% of all venture capital funding. And if you included at least one female founder in the team, meaning mixed gender diverse teams, that number tops out to 12%. That means that all male teams were still getting 88% of all venture capital. We knew we had to take urgent action. And importantly, we wanted to approach the issue differently. There was an opportunity to drive immediate change and knew there was power in a wider community focused on catalyzing a specific goal. And that's exactly what we did and continue to do. $1 billion in pledges later, with female founders making a comeback post a rough pandemic and the rise of female investors as GPs and angels all across the globe, the headline is this: that female founders continue to outperform and the funders that invest in them continue to drive returns through diversity. In a couple of weeks, we will be publishing our first Billion Global Impact Report, which speaks to our work in detail. But today, we wanted to share 4 key highlights of our learnings on this journey. Big, hairy, audacious goals. What some call BHAGs actually work. Data and stories power our work. Systemic bias requires systemic solutions, and success breeds success. Let's start with the first. BHAGs actually work. When we declared our intention to the World Bank to mobilize a global consortium with the namesake goal, the $1 Billion Fund for Women, as the target, we thought it would take us really years to reach the first billion. Our first back of napkin plans had scribbles of, hey, maybe 10 years to achieve it. But lo and behold, we did it in under 9 months. Believe me, no one was more surprised than we were. But that affirmed to us the commitment of the venture community on the heels of the Me Too movement and the understanding of what this signaling meant. It reminded us of the African proverb, which says, if you want to go fast, go alone. But if you want to go far, go together. And of course, we co-opted this to say, if you want to go fast and go far, go with women. We found that this could inspire positive action by tapping our networks and sharing not just the data, but more importantly, the real stories of both founders and funders that were held back only because of the lack of funding. While there were skeptics, and there will always be, many were astonished to learn this and eager to support an effort to address the system's failure with intentionality. Funds like Gobi Partners not only took our call to action, but as you can all see today, have built an entire plan surrounding gender-led investing as a return strategy for the firm. And as I understand it, we'll be taking it a step further with ESG. When in doubt, think big and find the champions, both men and women who will support your BHAG like we did. Number 2, data is key. Leverage data and stories to power your agenda. Data is key to both understanding the problem and measuring the impact of the solution. For years, the gender venture funding gap was not addressed because no one was tracking it. Many investors would think, oh, but I don't discriminate. But when we asked for their numbers, many were shocked at how abysmal their own investments into female founders were because of their lack of intentionality. Today, a number of key databases, including our partners at PitchBook and in Asia, Deal Street Asia, track both female founders along with many other parameters, allowing us to identify the existing and emerging problems. For example, in Asia, Deal Street Asia this year published that 93% of all venture capital funding in Southeast Asia goes to all male teams. And that excludes, of course, the mega deal that is Grab. While this is not shocking for many of us in the business, what is revealing is that 73% of all firms, venture capital firms in Southeast Asia, still to today, do not have a single female partner. As reported by PitchBook in 2019, female funders are more likely to invest in startups with one female founder and are 3 times more likely to invest in a female CEO. Additionally, per Harvard Business Review, VC firms that increase the number of female partners by 10% experience a 1.5% increase in fund returns each year, plus 9.7% more profitable exits. The bottom line, beyond female founders outperforming with higher valuations and quicker exits, firms know there's work to be done in bringing in female partners. As we like to say, when you invest in women, you're in good company. And now let me turn it over to Shelly for our other findings. Shelly, over to you.
Great, thank you, Sarah. That was a great intro and sharing of some of our insights that we'll be publishing, like we said, in a couple of weeks. Well, as you've heard from Sarah, we learned a lot in our 3-year journey. One key is as a growing body of research shows, is that among the leading causes for the egregious gender venture funding gap are both personal biases as well as systemic bias. Notably, a recent study by the Journal of Business Venturing concluded that VCs lacked a strong understanding of their own decision-making process and how they made their decisions, which when you think about the fact that this industry is decades old, is kind of shocking in a data-driven industry in particular. And what's clear to us is that while we may not be able to cure investors of their own personal biases, some of which translates to what is affectionately called or excused by calling it pattern matching, we can and must address the systemic bias we see. So the key question is how? Systemic bias requires systemic solutions, and that is our third lesson learned. And the top 3 critical areas of systemic bias among most VCs is, first of all, their deal flow sourcing process, then their evaluation of protocols, and then their methods of interrogating underrepresented founders, including women. Now, how can fund managers do this? Well, let's start with the deal flow. To address the fact that their deal flow often doesn't include women at all, or very few women, if that, VCs must expand their networks to include female founders, whether through association with some of the leading accelerators and universities in their area, or with some of the prominent women's networks, and or by hiring a female investment partner who's already active in these networks, as one of our most successful funds has done. Adjusting their evaluation protocols is another area. And to do that, to make sure they result, adjusting these evaluation protocols to make sure that they result in more female founded companies in the due diligence process. Funds that have had success have pursued strategies like ensuring that the deal review meetings have a certain ratio of female founders represented. One of our funds even fast-tracked female founded companies directly to their GPs to ensure that they got due consideration by the decision makers. Another successful strategy has been keeping a database of the companies who were not yet ready for VC investment, but who were of interest, and then periodically circling back to them every 6 to 12 months to re-examine their readiness. And last but not least, to address systemic bias, VCs must change how they interrogate women when conducting their due diligence. Studies show that VCs ask more preventative questions, highlighting potential losses and risks when meeting female founders. When the conversation focuses on negative areas, it's not surprising that investors walk away with kind of a negative gut feeling and can't, quote, get excited about the deal. Would you? So we are confident that the last lesson applies to even the most reluctant VC, and that is success breeds success. We know that VCs have a fiduciary obligation to achieve the best returns for their limited partner investors. A growing body of research shows that ensuring that there are women among the co-founders is key to this. Gender diverse teams and those founded by women only deliver anywhere from 23 to 63% higher returns over time than all male teams. Additionally, our report in partnership with PitchBook showed that women exit earlier with higher valuations per dollar invested than all male teams. Savvy professionals recognize that serving their investors better means ensuring that ESG standards, including investing in women and other underrepresented founders, is key to delivering the best results. So contrary to popular opinion that this would be a concessionary strategy to include women, it's quite the opposite. It's quite the opposite. It's to deliver better results. And we certainly have seen this. Not only do we now have 8 female-founded unicorns in the portfolio, including 2 that Gobi Partners has invested in. Congrats, Gobi. But our data shows that the $1 billion our funds are deploying has so far led to over $4 billion being invested in deals around the globe. Our partner funds know that when you invest in women, you're in good company. We'd like to thank you, Gobi, so much for your leadership and for being part of our journey to our first billion. We also want to thank you for this great opportunity to share some of our lessons learned today at this fantastic Gender Smart Investing Forum. Thank you too to our audience here for listening in on some of our key lessons learned. And we invite you to stay tuned for our first billion Global Impact Report. Follow us on social media at beyondthebillion.com. We're on all the different social media. We look forward to going fast and far together with you as we close the gender venture funding gap.